Good morning, everybody. Mike Vacchi here for PrincetonTrader.com with your Tuesday morning pre-market webcast. Okay, this is a daily chart of the ES. I've left up some of the Fibonacci levels that I use in my overnight work because I really want to illustrate what, in retrospect, yesterday was. We traded as low as 15.29.5. The Bears, I mentioned to my subscribers yesterday, I mentioned to everybody on the IM, yesterday could have been the Bears' best day, and they literally let it be their worst. And I'm not talking about up volume, down volume. I'm not talking about trend. I don't care about any of that stuff. I'm talking about the feel of the tape. The Bears gave up 23 handles. They traded down below all the key levels they needed to trade down, 44, 37, 33, and traded right down to 29.5, which was effectively the middle band and the 38% retracement of the move from 1481.75 to 1558.75. This move here, 38% retracement. So you would expect a bounce there, and that's fine. What you don't do if you're the Bears, maybe you bounce to 40. Maybe you bounce to the 23% level. Or you bounce to the bottom of the gap, which was 44, which is the area I discussed yesterday. What the Bears ended up doing was they just got out of the way all day long. And they gave it up from 29.5 to 52.5. 23 handles. You can't put in that kind of a performance and now turn around the next day and expect this market to go down, absent some kind of a news bomb. Okay? They got their negative piece of news. They pushed it down. They had the ability to hold it down and make lower highs on the shorter term charts yesterday. And what happened instead was literally nothing. From the moment we got over 44 and into that gap, the Bears basically walked away. So in me looking at this chart now, let's take this away. Let's take the fib levels away. And what do we have? I'll back out one. We have a uptrend, move to the lower band, right of the upper band, and a move down to test the middle band that held. That is what the chart is. It may not be what you want the chart to be, but that's what it is. So this puts the bulls in a position where they can go ahead and push up to new highs and try to go ahead and move back up towards that upper band up at 1571, 72 area, all the way up to, say, 1575. Not saying that's going to happen, but I am saying that's the way the chart is setting up. Now, this week is all about tomorrow. It's all about Bernanke and the dog and pony show with the press conference and all the other fun stuff, and that, I think, will overshadow, as it should, whatever's going on with the parliament in Cyprus, whether they're going to have a vote on the bank levy tomorrow, Thursday, whenever that happens. So that's what we need to be watching is Bernanke, because it's becoming abundantly clear that unless Bernanke says, I'm putting the brakes on, and he's pretty much going to have to hold up a sign at the press conference saying, I'm putting the brakes on, that these dips are going to be bought and we're going to move to new highs. I always say on here that the dip buyers have no fear. If they had any fear, it got taken care of yesterday. They went from 54 to 29 and basically got it all back. And all they had to do was just hang out and let the Bears do nothing. So now the dip buyers really have absolutely no fear. None at all. And maybe that's what turns us lower. But for now, the ball is in the Bulls' court to make a higher high versus 58.75. They better do it. If they don't do it, if they make a lower high, if they can't get over 52.5 today, if 52.5 doesn't get breached today, Then the bears have a chance to start to push back down and go to work on 44 and 37. But the ball's in the Bulls' court. The Bears put in a terrible performance yesterday. Okay, everybody, have a great day. Mike Vacchi for PrincetonTrader.com. I will be back tomorrow morning with another webcast. Trade them well, everybody.